Hello, everyone. This is Andrew Berman from National Mortgage Professional Magazine and Mortgage News Network. Thank you so much for joining us today for another Mortgage Leadership Outlook, where we've been meeting with some of the best and brightest minds in the mortgage business, the leaders who have been really just been helping us understand what's going on, understanding what to say to our customers, our communities, our families even. And it's been a pleasure to have some of the guests that we've had on. So today, okay, that's not Ray Liotta. Just so you know, I know it looks exactly like Ray Liotta, but who that is it's even better than Ray Liotta. Mike Tedesco, who's Chief Executive Officer of Appraisal Nation. Hopefully, Mike, I'll bring you in here. Hey, Mike.
Andrew, how are you, my friend?
Good. I am glad to have you. I mean, okay, it would be cool to have Ray Liotta. I'm not going to lie. Yeah. It would be cool to have Ray Liotta on here, but you're a close second. Okay, so just listen. By the way, I don't think actually that Ray Liotta is going to be able to do the deep dive into values, into the valuation business the way you are going to be able to. For how many years have you been involved in the valuation space?
So I started with an AMC. I used to be a loan officer, a young 19-year-old loan officer back in the early 90s. And I fell into the AMC space in 2000. So 20 years now.
Wow, 20 years. Fantastic.
We started Appraisal Nation, me and two guys in my attic in 2006. So we've been full 13 and a half years now of Appraisal Nation. And we've grown that to 120 plus employees, pushing out between 15 and 20,000 appraisals on any given month, on a good month, on a non-COVID month.
Fantastic. And listen, I see people are just starting to join us. So if you can, I just want to know if you're attending, if you're involved in originations, just let us know. Let us know you're an originator. But type in MLO in the chat box. If you're an executive, just type executive. I just want to see actually get a gauge of who's joining us today. So if you're an executive, please type in executive. If you're involved in originations, just type in originator or MLO in the comment box. So now let me ask you a question. So being an originator, I'm assuming that gives you some kind of a unique perspective, with your AMC that maybe another AMC doesn't have that originating experience.
Definitely. Most AMCs that we see today stemmed from the 2008 recession. And when the HVACC laws were enacted and air compliance came out, and many of these local appraisal firms and regional appraisal firms, they developed and grew into AMCs. And they all started from an appraiser, almost all of them. Appraisal Nation is very unique in that there are three partners, and all three of us have a different background. My partner, Brian, was at the time a 20-year AMC veteran. He's now a 30-year AMC veteran, 35. And myself, I was a loan officer, and our other partner, Anthony, he was an appraiser. So we brought in three very unique experiences, backgrounds, and cultures that really gave us a complete understanding of what was needed in the appraisal management space.
Wonderful. So I got a couple of different questions that I want to ask you. The first one I'm going to start off with, I want to ask you, do you have any concerns about, because we're now more reliant on database than drive-by products. Do you feel actually that this could impact, valuations over the long term?
Well, valuations are always based off historical data, so that will have to obviously remain to be seen. As long as the data is correct, most data is driven from the assessors, and most assessors are appraisers. So in that regard, as long as their information is accurate, the information that the present environment is utilizing would be accurate, and I don't see that it would have a significant impact.
Got it. So let me ask you this: since most cases where the appraisers are not getting into the house, it's not in most cases. I know a lot of cases, especially here in New York, that just happens to be the case. But without getting into the house, and then we have to rely on borrowers to share, any kind of upgrades or any things that you as the appraiser would normally see. so who's liable for any borrower submitted data that maybe isn't accurate? Maybe actually that kitchen really didn't get redone. Maybe they didn't, upgrade to a hot tub in the bathroom.
Well, honesty is always the best policy. I think that's holds true. We tell our children, holds true when you're an adult. So for that situation, I would go back to the onus of the person telling that. However, most of the data collected would be collected from the appraiser and the, as you mentioned on the last question, tax records. Now, any additional features or accessories or items such as that, that could be noted by the homeowner or realtor and shared with the appraiser, and it's up to the appraiser to comment. If he does comment, he would make the statement that that information was who that information was provided by. So there would be a liability to go back to them. All appraisers do that. Now, in our current environment, there are 3 states right now where the governor has asked appraisers not to complete interior appraisals, and that is New Jersey, I believe Vermont, and Pennsylvania. So in those states, we are doing exterior or desktop appraisals per the Fannie and Freddie guidelines. Although we're doing exterior only appraisals, Appraisal Nation actually created a new feature which we rolled out yesterday called our HomeLink walkthrough feature. And what that is, when we get an exterior or a desktop appraisal, we actually will send a link to the homeowner. The homeowner will answer questions through the link, take photos through the link, and submit that back to us, which we will review and send to the appraiser, who will then incorporate that interior information into his exterior report. It's extremely helpful because, to your question, it does give them the opportunity to show all additional features, all accessories. Example is we just built a secret bookcase. So we could take a picture of the bookcase. We could write a comment. This is a hidden bookcase, maybe give a picture of it open and closed, and submit that. And then it would be up to the appraiser to say if he felt that it was a functional obsolescence or if he felt it added more value or whatever the case would be, he would have that ability to make those comments.
Oh, okay. So technology is the answer. Technology is the answer. So, and like, is there a way that actually that you can like through GPS to tell where the person is taking the picture?
Yes. So part of the HomeLink walkthrough feature, which we're so excited about, every single photo is geocoded. It gives a date and time down to the second, and it gives a precise location using GPS technology down to the actual address as well. So we have that ability. Every photo is included in that. It does not allow you to have photos into the gallery. So for example, if someone maybe had a nice picture of their basement, then ripped their basement out, it wouldn't allow them to use their old photo. They have to use a present photo.
Got it. Okay. Well, that's good. Listen, I love to hear actually when there's solutions, technological solutions that are being addressed. Not putting people in harm. I'm going to ask. We got Joel.
Andrew, not of that feature is myself and my partners. We made the decision to include this product for all of our clients, all of our lenders, 100% for free. We pay for this every single time. And the reason that we're doing this is we recognize the crisis is impacting everyone. The last thing that we want to do is raise fees to the homeowners during these times. We're also paying our appraisers full fees, even though they're doing exterior and desktop products. So although they're completing what may appear to be an exterior, they're still including interior information. They're still doing a lot of work. And like everyone in this time right now, there are many of them who are facing challenges. So we're paying them full fees. We're including that information for free there's no additional charges, and we're trying to make this as smooth as possible for everybody.
So can you talk a little bit about how this is, because this has impacted states differently. Like New York is very different than the way Alabama has been impacted. Talk to us about it, where you're seeing, the hot pockets of where there's, I know you talked about what states aren't allowing you to do the appraisers, but what other restrictions or obstacles are you finding in some states?
Well, in any state that has a stay-at-home order, such as the state I'm in, North Carolina, or many of the people watching, which would be California or New York, where they have shelter-in-place orders, those states are definitely having more of an impact, because what's happening in, say, California with the shelter in place, or even North Carolina with a stay-at-home order, those appraisers just don't feel comfortable. And if they don't feel comfortable, or if the homeowner doesn't feel comfortable, that's a question we're asking at the beginning of every assignment. And then we immediately have to switch that order from an interior order to an exterior or a desktop order, depending on Fannie Mae's guidelines. So really, those states are having the biggest impact right now. It is not every state. Actually, I believe it's only, don't quote me on this, I think it's about 15 states that have those type of orders right now. There are many states all throughout the Midwest, Texas up, where they're being very cautious, but those orders aren't in place yet.
Got it. So do you have any pushback from borrowers that are saying, hey, listen, I don't want you in my house?
Absolutely. We see that a lot in California. They don't feel comfortable. They recognize that appraisers are traveling a lot and they're walking into multiple properties, and they just do not have a comfort level of having a stranger who could potentially bring in something into their home. So that's exactly why we ask the questions. We have a questionnaire we ask to the homeowners before we even have an appraisal go out for a 1004, and then we ask the appraisers where they are and before we do that. So if they both agree and they're comfortable, we'll complete a 1004. Otherwise, we'll move to an exterior product and we'll utilize our new home link feature with it.
Right. Just getting, actually, someone said, actually, we're getting a little bit of feedback. If you could turn your volume down just a tad and still hopefully hear me. I want to actually, I was having a conversation this morning, actually, with a good buddy of mine. He's an appraiser, Patrick McAvoy, Choice Appraisal, right here on Long Island. And one of the things that he talked about, and listen, this guy's been in the business for many decades. He talked about actually how when he goes to a house, traditionally, he always actually would get like a minute to 3 minutes just to talk to the homeowner and just get things that aren't on the checklist. You know, things that just wouldn't normally appear from just looking at the house. And he feels actually that by having this, this very let's call it very clean, approach there, because he's telling me, Andrew, before I get to the house, I call them up. I say, listen, turn all the lights on, open the doors. Let me do my thing. I'll find my way around your house. Just be there if I have any questions. And he says he's losing the opportunity to get that 1 minute to 3 minute chat. So do you think actually that and maybe that's a New York thing, maybe that's not something you commonly see across the country, but with that in mind, do you think things like that could impact, the true value of a house?
Yes, in some regards it could. It really depends on the appraiser. The appraiser has the ultimate say. It is his expertise. Now, there are many appraisers who don't do that for many reasons. They could spend 2 hours with a homeowner who says how they put new windows in. Meanwhile, every home has to have windows. So it really depends on what it is and who that appraiser is to make that opinion. The benefit to the home link feature that we mentioned, and not to keep reiterating the same feature, but it does answer a great question that I saw Joel just asked, and I'll get to that. Joel actually said, do we see that there will be any changes in the future due to what's happening? And I always believe that crisis brings out the best of Americans. And we've seen that time and time again. And I'd like to think that this is a time where we're going to see technological advancements and a lot of benefits. And this home link feature is definitely one that Appraisal Nation is now providing. And with that, they're allowed to add all of their features. If they put a new kitchen in, they can take multiple photos. The photos are HD. It allows the appraiser to zoom into different angles and look around the room. It has a lot of amazing benefits that can be included now. So although they may not be able to have that face-to-face communication with them, that homeowner is still able to put those features in, and that appraiser can decide if it's worth them adding.
So what was when did this come about? Was this just did you guys create this in the last month? Was this a direct response to COVID-19?
This is a response to it. Wow. We spent the last 3 weeks working with a technology provider to incorporate this and include this, and we're very excited about it.
So no, I mean, last 3 weeks you said actually it was when you decided to develop this? What was this, like back of the napkin idea, or literally like this wasn't even on your scope of things that you needed to do for the company?
Well, we've had this idea in process for many other products. As you know, we are a large private lender provider of valuation products. We are the largest provider. We actually complete about 70% of all institutional private lenders. We complete their valuations for about 70% of them. And some of the largest hedge fund companies, whether it be KKR or Blackstone, BlackRock, we're doing those valuations. One of the things that we see when we work with these lenders time and time again, which we see in the retail space, but I think that the GSEs have a lot more conventional wisdom in the sense that they want things done a traditional way. But in the private lending space, they are all about speed, technology, cost efficiency. And so we were looking at this idea for them with some of our hybrid product tools, and it really developed out of that.
Wow. So you had this idea, you were thinking about doing it, COVID-19 comes and you said, okay, let's do this fast. And I mean, listen, to be able to come up with a solution like that and have it, implemented in such a short amount of time is truly phenomenal. So talk to us a little bit more about the private lending space. So most of us that are going to be watching this are focusing on, owner-occupied, single family residential. I mean, that's who our audience is. But talk to us actually how different it is working with the private lenders, and especially in this environment. I mean, because I'm assuming they don't have to conform to USPAP or any other standards that we as an industry have to when we're catering to Fannie, Freddie, and the FHA.
So, correct in the sense that they may not have to conform to all the requirements, but keep in mind that there are state requirements for private lenders, and private lenders are typically investors working on commercial properties, meaning it be a second home, a third home, maybe they own 100 properties, whatever the case may be. So in that regard, when we have a private lender who has so many properties, his concerns are different. His concern may not be about being able to pay a mortgage like a homeowner would, but his concern is, I might have 100 tenants not pay rent for the next 6 months. So we have to accommodate for those needs and give an understanding for that. Our environment has completely changed in the private lending space. We presently have over 3,000 lenders who work with Appraisal Nation. Of those 3,000 lenders, over 1,700 of them are private lenders. And of those 1,700 lenders, 80% of them have presently put lending on pause.
Wow.
So they've said securitization is frozen, the bond market's frozen. We see the situation which has come out of the CARES Act for the renters. We're going to pause this. We're going to relook at our guidelines. We're going to tighten up our box, if you will. And they're raising their FICO score requirements for their investors. They're lowering the LTV requirements for their investors. And by doing that, they're really changing the entire environment right now.
Wow. So we thought we had it bad, but that's unbelievable. And like, is it? So you say it's 80%. Is that going to lock up for a long time? I mean, is it like is there any hope in sight? Is that gonna, like, what is the guess? Or they're just right? We don't know. We're locking this up. We're on a pause for an indefinite amount of time.
Every lender is different. Some of them are being very proactive, and some of them are being very cautious. I can tell you that we already have had correspondence with some of our largest lenders who will be coming back May 1st, regardless of the guidelines. They've already made decisions. We're coming back May 1st, and we have new guidelines in place. I think that once the larger ones roll back, then the smaller ones will follow. It likes to roll downhill.
Yeah. Now, were the larger ones the first ones to pull the plug?
They were, yes.
Makes sense. So how many appraisers do you have that are doing work for you guys on a regular basis?
Sure. So our network actually consisted of 26,000 appraisers. That is appraisers who we vetted, independent, certified, 5 years more experience. We have 26,000. Now, the actual utilization of that network is less than 12,000. So although there are 26,000 on the network, at any given time, we're only utilizing in the course of 2019, for example, about 12,000 of them. And many of them we have designated for different types of assignments. For example, we do what we call bulk private lending or bulk commercial assignments, where we have institutional private lenders who say, hey, I have 500 properties that I need inspected in this subdivision or in this region. And we have appraisers who specialize in just that. We have appraisers who specialize in multifamilies in New York. We have appraisers who specialize in commercial products. So depending on what the product is, we have appraisers specifically for those products.
So for this, it's 26,000?
Is the total network.
26,000. So is there any kind of guidance or advice that you've been giving these appraisers so that they can safely complete the projects?
So we have given the same guidance that you'll see through whether it be the World Health Organization or through the Trump administration or through many of the other sites that we're getting our information from in terms of social distancing and good health guidelines and things of that nature. We are being very cautious about anyone and asking them, if you're not comfortable, if you're not feeling well, if there's any sort of issue that prohibits you, please, let's be proactive, keep us informed, let us know. So that's been, we talk to our appraisers on every single order. So many AMCs, they do what they call auto assigning. They have a system that shoots out a mass email to a bunch of appraisers in a network, and the guy with the cheapest fee is the one who's going to get that order by the computer.
Yeah.
We don't do that. We've never done that. We work diligently on every single order. We have a rating system for the last 14 years where we call our appraisers based off of our rating system. The highest rated appraiser in that area is going to get the first call. We're going to explain the assignment to him, see if he's comfortable doing it, and then we're going to assign it to him manually. And they work with our assigning team, our assigners by states, build relationships with the appraisers in those states, and that's how we've operated. It's worked extremely well because not only do I have to build a relationship with all my lenders, we have to build a relationship with all our appraisers as well. And when we have good relationships, we get good results. So
are there any things that you do when you're vetting your appraisers? I mean, you mentioned like the basic requirements, 5 years, but are there any other actually things that you're looking for that's outside of the norm that, would make someone qualified for work for another AMC, but you guys say, it's not working for us?
Well, we do a criminal background check on every single appraiser, and many AMCs don't do that. That's also very important to us. So
that to me is such a liability to allow actually someone in your home without actually knowing actually that that they criminal background, sex offender list. I mean, but
we're going to do every appraiser as well as require their 5-year certification, which many people don't require. We also put stringent guidelines in place as to their E&O policies. They have to have a minimum E&O on every single person based off the state and location.
Oh, wow. So you're going the extra mile to make sure actually that the lenders that you're representing when you're going out to the homes, everything is good. So I like that. I think that's helpful.
C is not to give a value. I think that if you look on my BB&B right now, if you went to my Better Business Bureau, you would see that we only have a 3-star. And the reason is 2 of those stars have been knocked down because we get hundreds of complaints all the time, and every single complaint is the same. They didn't hit my value. They were short on my value. They didn't give me credit for my new windows. I know this house is worth $500 and they came in at $410. We do not control value. It's not a part of our function or our job. Our job is to protect the client, and finding ways to protect the lender is what we do. And we protect the lender through having all the layers of protection, as I mentioned, with the appraisers, by giving new innovations like with the HomeLink walkthrough. That's not a requirement by Fannie or Freddie to have interior photos on these exterior products. We're going the extra mile because we know a picture's worth 1,000 words. We want to give them another peace of mind and more protection.
Well, this just came in from one of my teammates. How much will the FDIC announcement of no appraisals below $400,000? I think that's just for refis affect you.
Well, we have other products besides appraisals, and lenders who still have liability for those products or for those properties and for those mortgages are still concerned, and they like to get other valuation products, whether it be our hybrid products or whether it be exterior products, BPO products. We have many different products that are available that are still being utilized for those mortgages below 400,000. But yes, it will have an impact on our business.
Yeah, listen, I mean, the lender still needs to know that there is some value there, that community hasn't just start to take a tank. So yeah, that makes sense. They're using some kind of products. By the way, we just had a comment that came in from Twitter from Joanne Owens. In Pennsylvania state law, drive-bys or desktop only.
Correct. And we mentioned that the 3 states right now, the governors have asked in those 3 states, Pennsylvania, New Jersey, and I believe it's New Hampshire. Those 3 states, the governor has asked that appraisers do not go into any properties. We are abiding by that requirement, and we are including our home link feature with those reports as well.
Yeah. So listen, I know actually what you look at is almost like a lag indicator of property values. So like, what you're looking at today is the results from months ago, up to 6 months ago. That being said, are you seeing actually anything are you seeing any kind of trends? Are you seeing actually anything where people actually are being disappointed by values? Because listen, we've had a month in this, there have to be some transactions that have to be showing up.
So what you have to realize, Andrew, is March was phenomenal. So before this happened, everybody I spoke to, thousands of lenders, were all on pace for record months. United Wholesale Mortgage, a wonderful client of ours, was going to do 60,000 orders, 60,000 in 1 month, and then this happened. So you have to be cognizant that the data that came out of March was still very, very good. We were 2.5 weeks in before there was any sort of shutdown or slowdown due to this coronavirus. So our March numbers were actually good. Now, April, the drop has been staggering.
Really?
We will get those numbers in May, but I can tell you when we look on just a weekly basis right now, the drop has been staggering. Now, the reduction in any property values, that won't remain to be seen for months. We probably won't see that data for probably 3 months out. And my hope is if everything starts to curve back and come back in the beginning of May and we can get back to business as usual in June, that it will be offset by the time summer's over.
Yeah, and everyone's still calling for an unbelievable year if we can, just get on the downside of this curve.
There are a lot of great, hardworking loan officers in this industry. They're all willing and ready to work. The rates are still low. The economy is ready to hum. We just need to turn the engine back on.
Yep. And listen, we have to be thankful, for FHFA, and our regulators for making changes and being quick to say, okay, what do we do to continue to get housing not shut down? While we're going through this, and do you think a lot of these changes will be permanent changes? Like, are the things that we're seeing, the push to desktop, the push to drive-by appraisal, are these temporary fixes to just deal with the problems that we have now, or is this something that the lenders have been pushing for a long time, and it's now actually something where we're going to be seeing this as the new norm?
I do believe that this is a temporary solution in many of the products. As a matter of fact, in the Fannie Mae guidelines, the March 31st issuance, and I have it here, it actually says that these are temporary. These are temporary guidelines in their Fannie letter from March 31st. So I believe it's temporary. But as I mentioned before, sometimes out of these temporary problems, and these crises, great innovation happens. And we're looking to see what opportunities can arise from this. For example, we're real excited about this home link feature, but what can we do with it in the future? Where can we go with it? Maybe there's a product offering out there for someone who has a really low LTV and a high FICO score that can give them a more cost-efficient, faster product for them. So we're looking at solutions, and we believe that this will definitely bring in more opportunity for the future, but I believe it's temporary.
in the home equity space. I'm assuming actually that's perfect for data products, things where you can have the borrower participate. So, I think that's great. So traditionally, Appraisal Nation, you guys are all working in an office. You have a physical office that everyone shows up to every day, right?
Correct. We actually work 24 hours a day. So we have our office, which operates from 8 a.m. to 8 p.m. Eastern Standard Time, Monday through Friday. We then have overnight work that helps us to assist for the next day in India and in the Philippines. And they help process and get ready for overnight work the next day. It's been an enormous impact trying to manage not only our 120 plus employees here in North Carolina who are all working remotely now, but to also manage those networks as well.
So now in the Philippines and in India, are they shelter in place? Are they working from home too?
Yes.
Wow. So now listen, we know here everyone has high-speed internet and they have computers that are ready to go. So for us to do it, there wasn't really much of a technological shift. And I don't know actually, what it's like actually in the Philippines, in a traditional home, or in India. Were they prepared, or did you have to go out and get them technology so they would be prepared to be able to work from home?
They did a really nice job. We did a good job vetting the partners that we work with, and they've done a really nice job transitioning. Keeping in mind, they already worked those overnight shifts for us. They're not processing anything, say, to the client directly. They're assisting in possibly reviewing some QC data and having that ready for our appraisers when they walk in the morning, or having our we call our WIPs, our work in progress list for our client representatives, preparing those and having those ready for them. So they were able to really seamlessly do a really nice job in keeping that process running.
Interesting. Wow, that's great. That's a great story to have that. It's definitely good to know. You personally, do you like this norm of being able to work from home? Or being forced to? What is it like for Mike Tedesco, the dad, the husband, the friend? What is that like? The brother?
Well, I'm a road warrior.
Totally.
So last year we did 54 conferences. I was away almost every single week, sometimes 2 and 3 times a week. We were constantly on the road. I haven't been home this much in probably 10 years, maybe more.
Wow.
So in that regard, it's been eye-opening for me because I've got to see, and I hate to say this, but I got to see how much I've missed. I consider Appraisal Nation to be one of my children. I've got to grow and cultivate it. And sometimes you spend a little too much time with one and you miss out on the others. But having my 16-year-old being able to go out into the driveway and play basketball with him every day, that alone has been worth it for me. Our 2 23-year-olds are home from college right now because they're being a senior, and everyone's home and working home and getting to spend time with them. There has been an upside to this in regards to that.
So what is your day like? Do you have a structured day, when you're working from home, or is it like, okay, wake up and just, because you have everything going 24 hours. So what is that like? What's you're waking up at what time?
Typically I'm waking up at 7. My day will start at 7. I'll wake up. My wife will make breakfast and get me going, and I'll be right into here. And I'm moving by 8 a.m. I will pretty much work till 6 or 7, and then I'll have my time. But I'm pretty much locked in here from 8 a.m. to 6 p.m. or 8 a.m. to 7 p.m. depending.
Well, and what are you guys doing in terms of to keep the team spirits up? How many employees did you say you had? 100?
Over 120.
120 employees. So what do you do to keep everyone everyone's spirits up? Because listen, we're all around the country. People are seeing some ugly things. I'm sure people are hearing things. They're listening to the news. How do you keep everyone's spirit up? And because they're talking to borrowers, they're talking to the lenders, they're talking to appraisers, and no one wants to talk to a negative Nancy. So what do you do to kind of keep everyone's spirits up?
Well, we have made a commitment to our team that we were doing everything that we can do to keep our full staff. There are many companies right now who, like I said, who have been on pause and they have furloughed their entire company right now. And we've made a commitment that we're going to do all we can to keep them, and we've done that. And we're staying informed with them. We have our weekly executive calls. We have our weekly team calls. We are making sure that the team leaders are staying in daily communication with each team member. And I think communication is key there. And as long as we're able to communicate and let them know where we are and what the future looks like, and the future changes. Every day the future's changing. But as long as we can communicate well to them, I think that keeps their spirits positive.
And you made that commitment. People know, like anyone who knows you, you are a man of your word, so you can stick behind that. And even if like our buddy Matt Ishbia, he said the other day, I will sleep on the couch before we have to let anyone ever go. And it just shows the commitment that he has to the team, and which is the same here. That's why. You know, I know you do a lot of business with wholesale lenders like United Wholesale.
Yeah, and there's honestly, I respect Matt. Every time I hear something come out or something new, it's you think you can't respect anyone anymore, and then you hear him say something like that. And his commitment to over 6,000 employees is just phenomenal. And if he can do it for 6,000, I can do it for 120. Right,
I know. Yep, that's a great way to put it. I love it, Mike. Well, listen, Mike, I got to say, like, it's a you are making the best out of an ugly situation. I think your appraisers are in a good place. Your employees, obviously, they're in a good place. The lenders that are working with you, most importantly, your family's getting to spend more time with you. So, all there are some silver linings of this horrible thing that we're going through. But before we go, you got to tell me, what are the baseballs behind you?
Oh, well, as a New Yorker, those are right up your alley. There's Mickey Mantle in there. There's Yogi Berra, Ted Williams. Those are my favorites. So that's my pride and joy right there. Hank Aaron, Willie Mays, all Hall of Famers are in that collection.
Wow, fantastic. That's awesome. That's great.
I don't know if you know this. I actually went and I visited. As we go throughout the country and as we do all these conferences, we always build a day in to do something fun, whether it be with our clients. And my brother, is on my sales team. Him and I are always constantly doing something. And a lot of them involve ball games. And I've seen every baseball park in the country. So as I do that, and there's an opportunity for a ball, I try and grab one.
So what's your favorite park to watch a game?
PNC Park, Pittsburgh.
Nice. What do you love about it? What's so great about PNC Park?
Oh, well, PNC Park is phenomenal. The views from anywhere are great. It gives you an opportunity of not only the river, it has the city right behind it. The food is great. If they could just get a team, that place would be exceptional. They have everything but a team in PNC Park. A close second would be San Francisco. That's a great ballpark. I'm a ballpark guy. I like the smaller, more intimate feels. I like Wrigley. I like Fenway. I love the smaller parks.
Interesting. So not a fan of Citi Field, not a fan of Yankee Stadium.
I like Citi Field. Citi Field gives you that kind of vibe also. Yankee Stadium, I can't understand how you can spend $1 billion and replicate the exact same stadium. No.
That's true. All right. Awesome, Mike. So thank you so much for joining us. Really, really appreciate that. And we wish you all the best.
Well, just know that I'm here for anyone. If anyone has any questions, they can always email me, mike@appraisalnation.com. My team is working around the clock. So any valuation questions, we're here.
Fantastic. Awesome. And again, everyone, my name is Andrew Berman, National Mortgage Professional Magazine, Mortgage News Network. Really, really appreciate you joining us. We've got a couple of amazing guests coming up. So tomorrow, Glenn Stearns from Kind Lending. Not like we have to introduce the companies, but we know Glenn Stearns. So Glenn Stearns is going to be tomorrow, Thursday. Let's see, we got Monday, we got David Luna. So excited to have David join us. Christine Beckwith I believe on Tuesday. Robert Stevens from GSF on Wednesday, and then David Schroeder from Caliber on Thursday. Exciting week coming up. Everyone stay safe out there. Thank you so much for joining us. We really appreciate it. And with that, I am signing off.